market volatility has become the new normal. Joining us by video chat is financial planner James D. Virgilio to answer questions about how to deal with the economic impact of the coronavirus.
James, thank you so much for joining us.
Thanks so much for having me.
So these are special times and the markets have reacted to the pandemic. What are you advising your clients to do when it comes to managing their financial portfolio?
What you want to do in any kind of crisis is actually begin to look at what your plan is. In this case, what is your investment strategy? And if you can't answer that question, now is the time to figure out what that is. You need to answer that to know whether you should be in stocks or out of stocks, whether you're comfortable holding them or not. There are a variety of different investment strategies you could use, which academia would tell us are good to use. And the answer from there is going to be what your investment strategy is.
Now, with the markets being so volatile, people have their money in the markets. People also have money on the sidelines. What should they do?
Well, again, difficult question. I think a lot of the answers that you'll hear are just remain in stocks. They'll come back up. While that may be true in the long run, this is very particular to your situation. If you're 70 plus years old, the answer will be very different than if you're 25 years old. If you're a buy and hold investor where you're just going to be holding a mutual fund or an exchange traded fund or stocks, that answer might be very different from someone who is a stock and bond investor or stock, bond, and real estate investor. So it's hard to prescriptively answer that question all in one, but I think the real answer to that one is this. If you have money on the sidelines right now, now is not the time to invest in stocks yet because the market has not found any kind of consistent trading range. And if you look at the history of the stock market, no matter what panic is affecting it, when you see a lot of downward trend or downward momentum, eventually that will begin to sort of get a consistent bottom, so to speak. And while you can never time the market, it's not a good idea to get in when there are so many unknowns right now. And that's the state that we are in. You're better off waiting for a better opportunity to get in. I will say this, though, the well-intentioned advice you hear that says, leave it in the stock market, don't change it, don't touch it, comes from the fact that in the long run, the U.S. stock market has been an incredible engine. It overcomes whatever is thrown its way. But that doesn't mean that emotionally we don't go through a lot of suffering just holding on to our stocks. So we have to go back to question one. What is our strategy? Why should I hold my stocks? How old am I? What's my financial situation? Because the worst thing we can do is abandon a strategy in favor of just our emotional responses.
So the message is stick to your goals.
Stick to your goals and then know what your goals are. That's the key. Because the reality is these surprises, these shocks, these environments, these are actually a normal part of life. We tend to look at these very distressing, uncomfortable things we can't control as abnormal, but that's to be human. Every single day, humans are tremendous at overcoming the hardships that come our way. This is a hardship we're facing. We will overcome it. And those that come out the best will have built a foundation that is solid based upon things that are wise, things that we know. And that allows us really to de-stress our lives and then to get through these difficult times without having to worry that maybe this could be the end, maybe it's all over. That's not going to be true. Things are going to be fine.
James, we're going to leave it there. That is some great information. Thank you for your input. Thank you for joining us.
Thanks for having me.